What's up, everyone? This is Prince Robert Onyeka with Prince Tech TV. Today I'm speaking with Will Bryant. He is the founder of Quantalytix, and what Quantalytix does is it provides advanced analytics and loan management systems to both non-traditional lenders as well as financial institutions alike. And when starting this company, or before he started this company, he had to take a very strict approach to raise the funding to support the development of his technology and his project and his company as its entirety. And so he talks about how did he diminish the risk to show value to his investors, as well as he also drops other gems that we can all learn from. So stay tuned for the discussion. There's a lot to learn, and I'm sure that you'll enjoy this. Hey, Will, how's it doing?
Good, man. How are you?
I'm doing pretty good. Thank you for coming out for this vlog series and sharing some of your insights with the viewers. And for everybody, Will is a former high school classmate of mine of Brentwood Academy. We graduated what, '09? Yeah.
Too long ago.
Too long ago. I'm already starting to forget. So Will is now an entrepreneur and he's doing some really great things. So tell us a little bit about yourself, Will, and what your company is about.
Yeah. Well, first off, it's good to connect with you, Robert. As I said earlier, it's amazing how time flies. But nonetheless, fun to connect, fun to catch up. A little about myself. Graduated high school with Robert. Went on to college, played soccer, and got my start in investment banking up in New York City. And did that for a little while before coming down to Alabama and working in private equity. And while I was doing that, I met my current business partner and co-founder, Chris Aliota. And we started a company called Quantalytix, which basically does loan management and risk analytics for non-traditional lenders. And we do that through both software and consulting services.
Nice. So what made you go into doing that? What drove you?
Yeah, so if you were to ask me even 5 years ago, I probably wouldn't have told you that I'd be working at a software company, better yet, running a software company 5 years from then. But largely how all of this came about was my co-founder, Chris, he spent his whole career in risk management and helping implement the software systems that were needed to do that sort of thing. And what he saw was that there was a lot of really poor software out there. And not only that, but you're having software that was repurposed to do things differently than they were built for. You had very limited access to that software, and you had very asymmetrical information gaps between those software. And so what that all led us to was saying, hey, there's got to be a better way to do this. So let's go out and start a company to see if we can do that.
Okay, nice. So you guys found out there was a need and you decided, hey, we feel like we have a solution. Let's go and solve it.
Exactly. Well, we didn't necessarily think we didn't have a solution, but we thought that we could build a better solution.
Okay. So it's kind of like flexible. So you came at this problem and you didn't have a solution at the forefront, but as you tried to dig into this problem, you started to create maybe micro solutions. Could we say like that?
Yeah, I think that's fair.
Okay, until it adds up and becomes macro.
Yeah, I think that's a fair assessment because it's a very big picture solution, and you can't just snap your fingers and make it happen overnight, right? You've got to get the customers, to help you along the way. You've got to get the funding. You've got to have the team. There's a lot of pieces that need to fall into place to achieve that big solution. So it takes time.
Yeah, understood. So you mentioned funding. A lot of entrepreneurs that are trying to do startups, et cetera, that's the big question. Where do I get the funding from and how do I get it? Can you tell us about how you were able to achieve that?
Yeah, well, it's funny is I always tell entrepreneurs or people considering entrepreneurship that funding is something they should not want. A lot of times people see funding as, just part of the process or something they feel like they have to do, when in fact, you take money because there's a good chance you're running out of it, right?
Yeah.
So ultimately, the point of a business is to generate a return and fund itself, right? So ultimately, fundraising is a means to an end, not an end. But to answer your question, to a lot of people's surprise, there's tons of money out there. I mean, it's all over the place right now, whether it's grants, whether it's, accelerator programs, venture capital, I think is raised all-time highs in the last 4 or 5 years. The point is, it's everywhere. I think the question is, really, is your product one that needs to be funded, and what are the reasons? And so with that in mind, another thing I tell everybody is that fundraising is not so much about, raising the money as it is de-risking your startup. And what I mean by that is, when you first start a company, you're dealing with all kinds of risks. Are you the right founder? Can you build the right team? Can you actually build the product or solution that you say you want to build? Is it even legal? You know what I'm saying?
Right.
Also, is there even a market for it? Do people want to buy what you're selling? Do a lot of people want to buy what you're selling? And then lastly, can you actually make the business model profitable and ultimately, help your business get to a point where it's self-sustaining? And so when you think about fundraising, you want to think of it as receiving money to basically de-risk all those things that I just listed. So going out, finding money to build your product. Once you have that money and you build your product, raising more money to go out to the marketplace and say, can I get one customer? Can I get 100 customers? Can I get 1,000? And then gradually, as you raise money, de-risking your product where you've in turn then created value.
Right. Because as you get more customers, you're then reducing your risk or diminishing your risk. And so when it's time to get the second round of funding, of course, it's going to be a lot easier to do. So I'm guessing that, well, I'm assuming based off what you said, that's the approach that you went for to complete your funding.
Yeah, well, it's one that I didn't, let me back up and say that you think about things in frameworks, right? You think about things in models. So how should I think about fundraising? Well, the model that I prescribe to is the one I just told you. Fundraising is a method of de-risking. And that's not something I necessarily knew when I first started the company, but that's something I learned in time and now sort of use within, my set of frameworks whenever I think about that sort of thing.
Yeah, that's very interesting because so many people focus on, okay, I understand the return is important. Getting your return on your investment is certainly important, but they don't articulate how are the risks managed, or how can I minimize the risk before they approach their investors to raise this type of funding. So I think that your approach and your strategy and your concept is is brilliant. That's probably why you got funded.
Well, it's the two are mutually exclusive, right? As you de-risk, you're creating value. And with value usually comes growth as well.
There you go.
So, I think the majority of the people probably think in terms of value creation, but not so much risk reduction. And
Right.
what I encourage people that are listening to this vlog is to see fundraising as a means of de-risking and not so much solely focusing on growth, if that makes sense.
Right. And that's definitely important because I don't hear many people say that come at it from that angle.
Mm-hmm.
And when you're trying to pitch to a very seasoned veteran investor, they're always going to look at what are the risks of me not getting a return on my money or getting my money back out of the pot. So,
right. Absolutely.
Yeah, absolutely. So my next question is, where do you see your company maybe in the next 5 to 10 years? Like, what's your vision?
Yeah, that's a great question. And it's one that, one thing I think a lot of people who start a company don't necessarily realize, or who are about to start a company, is that your vision does change over time. You set out, you start a company, and you think that, this is your 10-year vision. but in fact, it might be, 3 or 4 degrees in a different direction.
Right.
Solely because you've got to reconcile your product with what the market wants. And so for us, we had that reconciliation about 2 years ago, because we initially set out to sell our product and our services to banks, but we found out that banks don't need what we're doing. And so we went out to the market and we said, okay, let's think broadly here about who could use these services. And we landed on a group of clients as what we refer to as non-traditional lenders. And so again, that's an example of how the vision has changed over time. And so to bring it back to your initial question, 10 years from now, ideally, we'll be a comprehensive risk management and loan management platform, via software package, but also have a pretty robust consultative arm where we help companies do things like balance sheet forecasting, stress testing, portfolio management, things like that.
Nice. Nice. Okay. That's pretty good. So you guys have pretty much the vision laid out for how you plan to bring your impact into your industry. And my next question I want to ask you is, what is the biggest challenge that you're currently facing with growing your company and seeing that you improve the value, et cetera?
Yeah. Well, I think everybody is certainly aware that COVID changed the business landscape tremendously as of recent. But when we speak more broadly and more specifically to the industry that we serve and the issues that we face, we sell to very large clients. We're talking Fortune 500 companies. And when you're selling to companies that large, it's a long sales cycle. And for those of you unfamiliar with what that means, basically a sales cycle is when you first meet someone who you want to sell your product to, all the way to the time that they actually pay you the money for your product or service. And so when you're dealing with something like maybe an app, right, that we use on our iPhone, sales cycles are they can be less than a minute because you've got Apple Pay and all your stuff linked up. But when you're dealing with large enterprises, we've seen sales cycles last, anywhere between 7 months to about 1.5 years. So some of the biggest hurdles that we're facing is, continuing to keep our sales pipeline pretty robust and also moving all those sales cycles along and keeping them, up to speed.
Nice. Nice. So there you have it. Is there anything else that you would like to share with the viewers, Will? I just want to first, before you answer that, say I really appreciate you coming out. And this is very insightful. There's a lot of budding entrepreneurs out there, and I think this will be very inspiring for them. But we'll conclude with, is there anything else that you would like to share with everyone?
Well, maybe 1 or 2 things. Firstly, again, Robert, I'm thrilled to be on this vlog. I think it's pretty cool that you're doing this. And again, to your point, probably very encouraging and insightful for, people who are considering entrepreneurship or have recently decided to take on a startup. So one last bit of advice I'll offer the folks that might be considering entrepreneurship or considering starting a company. 2 main things. Number one, there's a lot of opportunities for entrepreneurship. And, there's a couple different avenues, but one I'd particularly encourage people to focus on is if you've been in an industry for a little while and you're familiar with how it works, the tools that you use on a day-to-day basis and the systems you use, really start to pay close attention to the things that people complain about. Because when people complain about things, then often that is an opportunity to improve it. So pay attention to that sort of thing. Secondly, don't just make the plunge. Really spend a lot of time prototyping your idea. More importantly, interviewing the people that would be using your solution or your product, understanding if it's a real problem that you're solving for them. And not only that, but if it's something they'd be willing to pay for, which is super important. And then lastly, trying to get the idea on its feet while you still have your current job, and sort of doing a lot of people like to refer to that as a side hustle, but try and do the side hustle as long as you can until basically you're at a point where you say, I can't, I don't have enough time in the day to dedicate to both my job and the side hustle. And then at that point, I think it's pretty safe to make the switch.
Right. That's powerful, man. Thank you.
That's only because we learn by our mistakes.
Right. We learn by our mistakes, man.
Yep.
Wow. I appreciate that, Will. And it's always a pleasure to catch up with you. So,
yeah, Robert, it's good to hear from you. And I hope to stay in touch. And,
of course,
hopefully you have a wonderful Christmas and a Happy New Year.
same to you.
Appreciate it.
All right, brother.
All right.
Bye.
See ya.